The question mark really is, while we've seen this 2 or 3 days of nervousness in the mid-cap stocks, what happens in the run-up to the policy? Do we continue to see this, or do we see better days as well? And to answer that, we have our experts with us. Sandeep Wagle to take us through the charts. In a bit, we'll also get in Manishi Raychaudhuri to speak about the fundamentals, and Nitin Raheja to speak about the fundamental end of the market as well. Gentlemen, thanks so much for joining in. Sandeep, one quick word from you really. The last 2 days have been jittery, not so much for the large caps. They have corrected, yes, but more so for the mid caps. Do you expect this carnage in the mid cap space to continue?
Yes, Neeraj, I would expect that to continue at least for another day, because normally when a fall starts, it lasts at least for 3 days, and it has started yesterday, today, and probably tomorrow. I think that should continue. But if you have a look at the Nifty, I really don't think there is any panic. I mean, 6,000 or 5,980 will act as a strong support, and we will be range bound in that 100-point band of 5,980, 6,000, 6,020. I don't see the Nifty moving out of that band till expiry at the least.
Nitin, there's some bit of nervousness that has crept in, more so in the high beta pocket, the rate sensitives or otherwise, and news which are slightly damaging are resulting in massive reactions on the stocks. I mean, what gives? I mean, why suddenly so much of skepticism in real estate or infrastructure when the policy details are not even out as yet?
Look, if you take what happened last year, you've seen the mid-cap index give you about 39 to 40% kind of return numbers, vis-a-vis the Nifty, which has been somewhere in the 27-28% return. Now you've made good amounts of money in the last 1 year, and a lot of your positives are actually in some form getting discounted into stock prices, at least in the shorter term. So while you clearly, there is a lot of expectation that is being built up on the future. So in the middle, if you get certain amounts of bad news, post such a run up, to have some sort of profit taking, or some level of nervousness creeping with regard to valuations is only very, very natural. So I don't think I would at least at this point of time feel perturbed by this whole thing. I think in the absence of great macros yet manifesting themselves, I think the approach should yet be focused bottom-up stock picking, even till you see an overall revival happening.
Okay, what put paid to hopes of any kind of uptick on the index was the kind of fall that Tata Motors showed, and while it recovered intraday, it didn't have the best of sessions, and I think the profit warning given, more importantly the warning on the EBITDA front, had a bit of an impact for Tata Motors, so that didn't do too well. As I said, probably recovered a little bit of ground from the lows of the day, but hit its lowest level since December 13th as well, and the management did say that EBITDA margins are likely to be lower while the revenues may stay slightly higher, which would essentially mean that the bottom line would also be under pressure this time around. Brokerages came out, advised investors to buy on declines, but there are equal number of brokerages that also have given a price target much lower than the current market price even. Nitin, one quick word on what did you make of the commentary from Tata Motors ahead of the numbers, and particularly the warning on the EBITDA front?
Look, if you look at what they're saying that, look, volume growth has been okay, not bad. What they're saying is the volume mix has been different. In terms